Nee.
Still can't hear you, Elo. But
Joo.
maybe Michael can comment if you can hear Elo.
Can you hear me? No? I can just hear Grete.
Elo, try now.
Yeah?
Now I hear you perfectly.
Ah, okay, cool. Yay. Okay, so let's see.
So it was probably my problem. So sorry.
It's fine, just whatever works. Yours or mine. Okay. Let's see. Can you see my screen now? Or no?
Yes.
Yeah. Okay.
Oh,
I can't see it myself, but if you are seeing it, it's fine.
yes. Hi, Ronald.
Hi, hello.
Hi.
I was just checking out new type of webinar again, software.
Yeah.
I know it never stops, right?
Keep on innovating.
It's new for me also, so.
Okay, so because I'm not checking out how I can share my presentation. Share
You
your
want me
screen.
to? I can stop my sharing for now, so you can test,
Okay.
and we can say if we see it when you share it.
Check next to where you can press the red button, and there's like share your screen.
Let's see it. Let's see. This one. No, it's not. I guess it's shared now, but not in presenter mode. Is that correct?
Now it is not in presenter mode.
Okay. Yes, this is better.
Yes, perfect.
The only thing is that I don't see anything now anymore. Let's see how we can fix it. Or not. I'm just talking and I just check if there is anything, then you can always intervene.
Absolutely.
Yeah.
So are we live now already or not?
No, it's in 5 minutes.
Okay, because I see people joining, so they are still in the waiting list, waiting room.
That's a good question. I think people can hear us, but that's okay because we start in 5 minutes. We're just testing out some technicalities.
Okay.
But I think for now it would be good if Elo shares the screen to begin with.
Yeah. I got it now. Okay.
It's perfect. So a warm welcome to everyone who has joined us, and we will start in a couple of minutes.
So hello everyone. It's now exactly 2:30. So I think let's get started, and some ones that are a little bit late can join us. So first of all, thank you for everyone for joining us today on the crowdfunding webinar. My name is Elo, and I'm gonna be your coordinator today here. So first of all, a little bit about the project Tetra. So Tetra is a business accelerator for the NGI beneficiaries, which means that if you are funded for under the Next Generation Internet initiative, we are helping you to reach the market stage. So we are doing trainings, mentoring, and helping to build networks. So today's webinar is also one of our trainings, but it's open for also everyone from outside of the NGI. And I'm showing a little bit about our next coming webinars. So our project started in 2019 and it's ending actually April this year, but we are still doing a couple of very interesting webinars in this month and in March. So for example, we are having a webinar on the post-investment life with investor, on GDPR and on privacy. And you can see all of the things that we are organizing on our webpage. So it's business.ngi.eu. And in March, we are also organizing a public funding masterclass, just mentioning that this is actually for the NGI initiative projects, so it's not open for outside. But anyway, if you are a researcher or a startup who, for example, is interested in Horizon Europe, but you haven't written any grants before or any applications, this is something that could be really beneficial for you, as you can hear a webinar about the Horizon Europe, and you can also receive 2 or 3 hours of personalized mentoring on this topic. So this registration is also open on our webpage, so feel free to go and check it out. And a little bit about me. I'm one of the Tetra coordinators, and in my everyday life, I work in Civita with innovation projects and startups. And on today's webinar, we are hosting it on Zoho. And for the ones who haven't maybe been in here before, then the chat is on the left. It's called Q&A, and any question you have during the webinar, feel free to click there and you can insert a question from under. There is a box there, but you can also always raise your hand. And without further ado, welcome to our speaker today. So our speaker today is Ronald Cleverland, and he's one of the most proficient people in crowdfunding field in Europe. So we are extremely lucky to have him here. So now, Ronald, I will give the microphone over to you.
Thank you, and thanks for a nice introduction. I will start sharing my screen. It's the first time in Zoho, so let's see if it works directly. Should work now. Share.
Yes, we can see it well.
Great. So thanks for this invitation, and very glad I'm able to share some insights on the developments on crowdfunding. So my name is Ronald Cleverland. I'm the director at Utrecht University of the European Center for Alternative Finance. And a little bit of background from my side. I've been involved in the crowdfunding industry for over 10 years now. In the beginning, it was really focusing on the donation part, reward-based crowdfunding elements, but it later developed more to investment crowdfunding. I will go more into all these details of different types of crowdfunding during my presentation. I will start really at the basics, just to make sure that everybody understands what is crowdfunding, what is the potential, and what is the added value, especially for startups and innovative tech startups to use crowdfunding, because I've seen very great examples, and I think it's also very interesting for a large group of the participants of today also to use crowdfunding. But it's not. But you have to know how to use it. Therefore, it's very important to know the basics and the fundamentals behind the concept of crowdfunding. I'm based in the Netherlands. I've been advising the European Commission on several projects and also involved into the new European regulation of the crowdfunding industry. And that's a very interesting part, and I will end my presentation with that part because it gives even more possibilities in the future for how we're going to use crowdfunding for funding startups. So, as a startup, you're looking for funding. You've received some grant funding, perhaps some basic seed funding already. So you've been in this position. Perhaps you have been pitching your concept either to rich individuals like here, like Shark Tank, business angels, one-on-one, or perhaps even trying to get a loan from a bank. This is the traditional way how startups have been raising money for the past few decades, and in fact still are using it to raise funding. But currently we have much more possibilities, and there crowdfunding also comes in. And I will not tell you that crowdfunding is the solution for everything, because VC funding, business angel funding, bank funding is still interesting in certain moments in your life cycle and the growth of your company. But you should consider crowdfunding at least as one of the options to raise funding. And what I will also show during this presentation, it's also interesting to combine these different types of funding because they also support each other. Sometimes crowdfunding makes it easier to get a bank loan or to raise venture capital, for example. So what will I discuss today? I will start with the basics. So what is it? What is crowdfunding? Why is it so successful? And is it also very new now? Perhaps a very strange approach, but I will focus also on the motivation for the investors. So what are these crowdfunding investors? Why do they want to participate in your project? And I will explain that there are different types of crowdfunding investors. So it's not just one type of investor that is supporting all these different crowdfunding projects. But I can explain already, I can tell you already that there are a lot of different investors. Perhaps even more interesting also for you, because you are just at the start of the growth of your company, how does it affect your future funding rounds? It's a new type of funding, so traditional investors, financiers sometimes find it very difficult to see what is the added value of crowdfunding. but we've seen in the last couple of years very good examples where crowdfunding helps to raise additional venture capital, for example. And also you see combination of funding rounds where professional investors and crowdfunding investors find each other. In the end, I will focus on some specific tips, because I think that's the most important part of this project, this presentation. Also, what can you do with it? So to start with the basics, what is it? The core of crowdfunding means that while traditional financing is focusing on having one bank, one venture capital fund providing you the money, you will now have a very large group of individual investors bringing together funding for a very specific goal. And is this something what is new? No, for sure not. This is something that's been done for decades, hundreds of years even. A great example I always find the Statue of Liberty in New York in the 19th century has been funded solely through crowdfunding. It was possible for people for just $1 each or a little bit more to support the development of this Statue of Liberty and also to place it in New York. More than 120,000 people contributed to this goal. More than $100,000 was raised, and if you convert it to currency at this moment, it's more than $2.5 million on board. It took them 5 months to raise the money, and they didn't have any social media, they didn't have any email campaigns, so it was door-to-door campaigning, it was flyering in different areas, but also one of the main newspaper publishers, Pulitzer, was using his own newspaper. And just like a normal crowdfunding campaign, he was also posting updates on the fundraise in his newspaper. So this is an old-fashioned way how they, with technology from that time, try to inform also the backers, the investors, and the donors on the progress of this funding campaign. Focusing on business funding, because the Statue of Liberty is interesting, of course, but you want to raise money for your business. So what are the models that are interesting for you as a business, as a startup to raise, to use crowdfunding? There are 3 main models. I'm not going to all the details of the submodels, but the 3 main models are the reward-based crowdfunding, peer-to-peer business lending, and equity crowdfunding. And I will go through all of them individually and also explain what the differences are. So to start with reward-based crowdfunding, perhaps it's the most common known type of crowdfunding for, at least for people working in the tech industry who've been looking into Kickstarter, for example, to support some new ideas, some new innovations. This is a great example that really kicked off the growth of reward-based crowdfunding in worldwide. This is Pebble. 10 years ago, in 2012, they wanted to raise $100,000 as seed funding. We need to start building the first batch of programmable watches. So at this moment, everybody walks around with an Apple Watch or an Android watch that is possible to adjust the front end of your watch. But in 2012, nobody has developed it yet. So this was a really innovative product, and they needed to have $100,000 to make the first production. But instead of reaching out to a business angel or a venture capitalist and give away some equity in their company, they reached out to an online platform and tried to find potential buyers of their product already. So it was in fact kind of pre-sales, and it was really successful. So instead of $100,000, they raised more than $10 million, and more than 60,000 people ordered at that moment already that watch. You have to be aware, so the watch, it wasn't developed yet. They only had some prototypes. So it was a very high risk, of course, but the people were really interested and they really want to support the makers to develop this watch in the end. And because it was also at that moment by far the largest crowdfunding campaign, but because it was so successful, and they raised $10 million dollars with it, They didn't stop there. So this was in 2012. In 2015, they did a second round. So they had a new phase, a new type of watch developed. They wanted to raise they raised $20 million. A year later, the next product they wanted to launch raised more than $12 million. I'm showing this because it shows the power of crowdfunding, because it shows the power of, if you're building a community of potential customers, they also want to support you in your follow-up rounds. And you also can use it to incremental develop a new type of product as a company, for example. But always the campaign is really focused here on a product. This is a business to consumer product, makes it much easier than a business to business product. But for business to consumer products, reward-based crowdfunding is very successful. They were using platform Kickstarter, and Kickstarter is by far the largest and most successful reward-based crowdfunding platform in the world now. They've raised more than $6 billion in funding for the projects on the platform, and more than 20 million people are investing or supporting one or more projects on the platform. And what kind of products are they supporting? Just give you an idea. Especially if you're focusing a bit on the larger funding rounds. So the funding rounds where the projects are raising more than $100,000, sometimes more than $1 million. You see that there are three main categories: games category, design category, or technology. So if you are a future internet startup, tech startup, and if you have pure technology, you already have a good chance. If you can gamify it a bit, perhaps there is even a better chance. And if it looks nice, it's a nice design, I think you hit the bingo, and then it's a good approach perhaps to use Kickstarter to raise some funding. But these are, of course, some examples. But if you've seen already that almost 7,500, 8,000 of these organizations raised more than $100,000 as seed funding. So of course you can still raise additional funding, but this is really seed funding for a product that you are developing. But the product, of course, can also be different. You don't have to give away as a reward a product like a watch or a B2C. It doesn't have to be tangible. It can also be a more social reward. So this is an example of something completely different. This is a bridge, community funded in the Netherlands, in Rotterdam. And it was the people who were supporting these initiatives, the only thing they would get back was their name written on the bridge. So you're seeing that this is a real life picture of the names of the supporters, of the backers on the bridge itself. And why is it important? Because when you are starting a crowdfunding campaign and you don't use an investment campaign, like a lending or an equity campaign, it really helps if you can give something back to the potential donors. Because if you don't do it, the average amount of donation is around €20. If you are using a reward as a return, so either a product like Pebble, or just even such your written name on the bridge, it's the average amount of money is around €80. So it's 4 times more. So it helps you also to raise quicker, and it doesn't have to cost you €60. So sometimes it only costs you €10, but it really helps you to raise your money and your goal quicker. So focus on the second model, the lending model. Sometimes called peer-to-peer business lending, crowd lending, peer-to-peer lending sometimes. The idea is you have a group of people bringing together money, but lending it to the business. So you need to pay it back. There are a lot of platforms out there. I just want to show one of them. This is a platform called Funding Circle, active in several countries, also in Europe. Very successful, and here they raise more than, or the companies on this platform raise more than £13 billion already, and more than 180,000 companies were able to apply for a business loan on this platform. So sometimes it's really financial driven. There you see these investors are connected to these platforms just to have financial return. But you also see these platforms that have a much more social types of loans where you don't have to pay a higher interest, for example. You don't have to provide a lot of collateral. And it really depends on the platform you are choosing, and there are dozens, perhaps hundreds of them all over Europe. All have their different target groups as startups or SMEs they are supporting, but also target groups as investors. The only thing I have to mention here, for very early stage, high risk startups, of course, a traditional business loan is quite difficult to apply to. It's much more higher risk, so you have to find a way to convince your potential investors why they still want to provide to give you a loan instead of equity. And that's also the reason why equity crowdfunding, especially in an early stage, can be much more interesting. And equity crowdfunding doesn't mean that you have to give away a lot of shares, or at least, and you don't have to give away your voting rights, especially that's very important. So you have to make sure that the way you are structuring your funding deal is that the equity investors, the equity crowdfunding investors, are most times only interested in having a financial share of the company. They don't want to have the legal share or the voting rights in the company, because they also know that if there are 10,000 different small equity crowdfunding investors, they're not going to vote on management decisions. That's something that you as a startup founder, your management team needs to do. But if there is an exit in the end and there's a value gain, then they want to profit out of it. And to give some examples, this is an example from Germany. Sono Motors, they started in 2017 with an equity crowdfunding campaign. They raised 1.8 million euro. This was really money they needed to start up this new car manufacturer. And what the idea is that the top of this car is completely covered with solar panels. So it's a solar-driven car, completely electric, but it can also charge itself by solar light. It's not a spin-off from an existing car manufacturer. This is a completely brand new car company. They wanted to have it community-owned, so they raised this 1.8 million through equity crowdfunding in the beginning. And 3 years later, in 2020, they did a new campaign, but then instead of raising equity, they did a pre-sales campaign, raised more than 50 million euro in pre-sales for this new car. So more than 12,000 people ordered a car, did a down payment already, and helped them also to build and manufacture this car. And the first ones are already on the road at this moment. So this is an interesting example. Another example is one of my favorites is Brewdog. Brewdog is an innovative, or at least it is a new brewery type. They started already in 2009 with their first equity crowdfunding campaign, and they called it Equity for Punks. They were doing it completely different than traditional beer manufacturers. They raised 750,000 pounds in this first round. And then every 2 years, 2011, 2013, 2015, they did a follow-up round. These rounds were getting bigger and bigger. So the second one was 2 million, the third one 4.5 million. And in 2015, they did a 19 million funding round. So in the end, they raised more than 80 million pounds already in equity crowdfunding, and we have 180,000 they call investors now, who are shareholders in this company. And of course, they don't have voting rights, but what they have is a membership card. And that membership card is for them very important, because with that membership card in the local bars, they get a discount and a free pint on their birthday. And therefore, these equity punks, they don't want to sell their shares because that's their added value. Not only having these micro shares in the company, but also be part of this community of equity for punks. Interesting enough, 2 years ago, Brewdog for the first time raised external capital from a venture capital firm. And that was really the first time that the valuation was tested with an external investor. And at this moment, this company was already valued as a unicorn, so it was valued more than €1 billion. This is, of course, an interesting example, but it shows also that the early investors, so the early investors were investing already in 2009, 11, 2013, they made also a huge profit because the market value, of course, of the company, and for that also the market value of their shares also increased. So it's an interesting way of involving your individual investors, but also directly involving your customers and also rewarding them for taking the risk of supporting you in a very early stage. An alternative way of rewarding your investors is using profit sharing. So instead of investing in an equity, you are getting you receive a percentage of the revenues of the company. As an investor, that can also be interesting because especially if you're investing in a software as a service company or another fast-growing tech company with a very good scaling model, the profits, of course, can also be quite interesting. And by being creative, you can create a model for you as a company owner that also is very interesting for the investor, but also gives you the flexibility to work with it because it's not a loan, you don't have to repay it. It's not equity because you don't have to provide any equity, but you share some of your future profits with them. Gives also a bit more flexibility and also perhaps sometimes easier negotiation on your cap table if you are looking for additional investors. If there are any questions, by the way, please ask. And I'm just presenting now, and it's difficult for me to view the Q&A and the questions. So if the moderators see any questions that are interesting now for me to answer, please let me know.
Yes, I will interrupt here a little bit and say that there is a question in the chat asking if, like saying that Pebble raised a lot of money and failed hard. Are they a good example?
Good question. Yeah, so they raised a lot of money. They failed hard indeed, and but that's something that's happening with all startups. I don't want to explain that this is the best way of raising money because they were very aggressive, and because they were one of the first, everybody jumped on and thought that it was the best investment ever. And of course, we now know that you have to be a bit more careful, and also when you are providing your statements, financial statements, of course, also. Why you're raising money, how much money you're raising, you have to be careful. And one of the biggest problems Pebble faced, and that was one of the reasons they failed very hard, was they were accepting too many of these pre-sales. So it's nice to see that you're raising 10 million and you're raising $20 million in pre-sales. But if you don't have your production ready and your production lines and you cannot deliver, you get all kind of investors that are and also customers, of course, that are not supporting anymore because they see that you are not delivering what you promised. So in hindsight, it was much better for them to say, okay, we stop at 1 million, for example. Now that's the maximum that we are allowed to raise at this moment. We're going to start our production, and if we are up and running and we've delivered these products successfully, then we start our next funding round, and perhaps then we can scale up to 10 million. But that's and that's always the risk indeed. If you are having a very successful product, is that you are over-promising or you're overselling and you cannot deliver. So that was one of the biggest risks and also the problems of Pebble.
Yeah, thank you. There was another comment saying that now the rewards in EU are VAT taxable. Do you have any comments on this?
If rewards are VAT taxable, difficult question to answer, because this really depends on the country where you are in, because also VAT is also different in all countries. Normally, of course, it is part of VAT because you are delivering a product and you have to include VAT. Even more, what you see now, if you are delivering these kind of products outside the EU, you see also that there is sometimes additional tax included there from the border patrol. But that makes it, but that's something that you don't have to pay as a company, but this is something you have to pay as an investor if you are receiving that product.
Okay, yeah. And there's another comment. I will read it to you. So, what rewards would work for an open source, free-to-use project? I set up a Patreon page last week, but not yet sure what kind of rewards I could give to people. I could implement features per user.
So I didn't understand. It was an open source. What kind of project?
Source. Yeah, it's an open source, free-to-use project.
Okay, free to use. Okay. Yeah, good question. Of course, what helps is if you give people the possibility indeed to, for example, additional voting rights on what kind of open source projects you want to take on. So additional elements in the open source project. So give them a say. That's for people already very important. So they can, if they are a potential donor, they have the possibility to go to a member-only part, for example, to have a discussion with the developers or with the product owners. That's an added value that you can add. Depending on the type of project and also the type of clients, you can also focus on consultancy services that can be given. So the consultancy service for implementation, for example, can even be custom-made additional implementation solutions. So these are some examples, but that's something that I'm just now giving some ideas. One other thing I'm just thinking, I've seen also in other open source projects, sometimes you can create some small products around an open source community that you can share. Either it's a very simple figure, for example, that you can send to donors that they can put on their table. It doesn't have to do directly with the open source product, but you can think about something that has your logo on top of it. These are the kind of rewards that, especially in the open source community, stickers, for example, can also be very helpful. Doesn't have to cost a lot, but it shows that you have done something else, so you can put the sticker on your laptop.
Okay, there is 2 more questions. Okay, one is here thanking the person who asked about the open source free-to-use project because they have a similar question. And the other one is asking, what are the alternatives to Kickstarter? Are there any other online crowdfunding options that don't involve crowdfunding platforms like Kickstarter, which would spook some people off?
Okay, yeah. So there are a lot of different alternatives. So the main main competitor of Kickstarter is Indiegogo. So Indiegogo is also an American-based platform, but most of the time, every country has their own reward-based crowdfunding platform. And even if you don't have a platform yourself, there are also a lot of open source solutions that are available that you can use to set up your own crowdfunding project. For example, WordPress plugins can also be used. So it doesn't, especially for reward-based crowdfunding, you don't have to use a platform. The added value of a platform, of course, is that there are already thousands or sometimes millions of potential backers are connected to the platform, and it can help you also to reach a larger audience. But if you are only using it for your own community, your community that you have been building already, you can also use it on your own website and set up a plugin, create a plugin, use some open source technology to start your own campaign. That's also possible.
Okay, thank you. And the one last question, then we can move on, I think. Do I need VAT to become a sharing angel?
Do I need VAT to become a sharing angel? No, because this is, I think the question is about value added taxes. This is nothing to do with taxes. This is just profit sharing. So based on the profits that you are making as a company, a part of it will be shared with your early stage investors. But of course, you have to be a company and you need to make any profits. So that's of course in the end, the only way. Of course, you can also pay out to your individual investors. Okay. Don't hear anything, so I will continue. And this perhaps also answer a few questions that were here also before, because this is looking at it from the other way around, looking at it from the part of the investor. So why is a crowdfunding investor supporting a specific project or a specific company? And there is not one motivation, and that's very important to understand. If you're reaching out to potential investors for your crowdfunding campaign, you have to find out what kind of investors do you reach out to. Try to group them also in potential supporter groups. And if you look on the top, for example, you see these are investors that are just looking for financial return. So these are these investors that are either looking for, as a business angel, investing in a lot of different startups, trying to get a high return on their equity investment, or these are these investors that are investing in a large group of companies with loans with high interest rates, so they know when there are a couple of defaults, they still have a very nice net return of 4 or 5%, for example, in their investments. So these are the investors that are on the top of this pyramid, just looking for the financial return. If you're looking on the left part, on the social type, these are the supporters for a specific project. That can be the open source project where people want to support you because they think it's a very interesting, a very useful, but also very powerful initiative, and they don't want to get anything back. These are the pure donation-based supporters. On the right side, you see the material-based supporters. They want to support your activity, your project, because they are interested in the final result. So that can be the Pebble watch, that can be the Sonos car, because they just want to drive that solar-powered car. So they see it as a pre-sales type of crowdfunding. So that's also the type of crowdfunding that you should implement. And what you see on the bottom in between, this is the reward-based crowdfunding. So if you look into the open source example, perhaps that people want to support it and they think it's very important, but they also want something out of it. Perhaps it is because a new part of the open source project has been developed, so it's another feature that is available for them. So that can even be enough for them. It can be your name on the bridge, for example. So it's a donation, but you get a very small reward, also a social reward you get in return. So this is important to keeping back in your mind if you're designing a crowdfunding campaign, what kind of potential donors, what kind of potential investors are available that are interested in participating in these campaigns, because that also defines the type of campaign, but also the type of platform that you are going to reach out to. Some platforms only have these financial driven investors. Nothing wrong with that, but then you also have to make sure that your offering to them is very financial driven. You have to tell them in financial language what's the return on investment. So what is the risk and how you mitigate these risks, for example. That's totally different language also that you're using when you're focusing on the social type of investors on a donation platform, where it's more about the impact and driving this social change, for example, for the community. But for all these types of crowdfunding, it's important to know crowdfunding, in basis of crowdfunding, is community funding. And why this is important is that all these different type of crowdfunding investors, what they have in common, they want to provide you with more than just money. So they are also a great way of supporting your marketing activities, for example. They can support you with market research. They can also provide you with additional ideas for future development of your product or of your company. This is something that's also always important to keep in mind, because a crowdfunding campaign costs you a lot of money, but also it costs you a lot of time and energy, perhaps also money, but more time and energy. But you have to see this investment also as an investment in marketing. So you're building this community that can support you also in the future growth of your organization. If you talk about the future growth, we also talk about future funding rounds. So how do you combine crowdfunding with traditional funding or next funding rounds? I just want to show some examples, and I think that because that explains how it works. This is an organization, it's a Dutch organization, it's called Snapcar. They call themselves an Airbnb for car sharing. They're operating now in several countries in Europe. And what they've done in 2014 already, they did a campaign where they're raising funding for growth. And they didn't want to reach out to a venture capital firm yet, but they want to reach out to their own community, their own users of their technology, or at least their platform. And because they were very enthusiastic users, they were already a part of their marketing team, because they were reaching out to potential other users. So they were using a crowdfunding campaign, raised a bit more than €500,000 in loans, but they structured these loans as convertible loans. And it means that it is just debt, so you have to repay it, but it gives the rights for the investors in a follow-up round. If there was a venture capital investment and there was a valuation, at that time they were able to convert their loan investment into equity. And of course, because they were a very early stage investor, they get a discount on the equity price. And the added value for this organization, why use a convertible loan, is if you want to raise equity, there is always a discussion about the valuation of your company. That can be costly sometimes to define, but it's also in an early stage, the valuation of your company is not that high. Even as a startup founder, you think it's very high. In the end, it isn't that high yet. So it's better to wait a bit and try to grow and show a momentum and make that decision and try to find that valuation as late as possible. And if you've seen your growth and you've reached your milestones, then it makes it easier also for you to to explain why you're using a higher valuation. So they did this round $500,000 in 2014. A year later, they did an additional funding round for €600,000. And even last year, they did again a round of €500,000. So you can combine these different funding rounds all the time. Another example is the Oculus Rift, also raising funding on Kickstarter. They raised $2.5 million also in pre-sales, so it was a reward-based crowdfunding. Because of the success, it was for them quite easy to raise venture capital funding. So they raised several dozens of millions of euro in venture capital funding. And quickly after that they were bought for $2 billion by Facebook. So this is an extreme example, but it's an example of how a successful reward-based crowdfunding campaign by using venture capital was quickly able to get to an exit to sell to a large investor like Facebook. But you don't have to do it step by step. It's also possible to combine some investment rounds. So what you see nowadays quite often on a platform like Crowdcube. Crowdcube is one of the largest equity crowdfunding platforms in the UK. You see that there is a combination of equity funding from the crowd and equity funding from venture capitalists. So this is an example of a startup. They wanted to raise $1 million in equity crowdfunding from the crowd. They additionally to this, they did a venture capital round. Plus, there was some funding from BMW, who were the investor, and also the previous employer from the founders of this company. So this way, you see that it's getting much more normal to combine these types of funding. And the best example I still find, this is Monzo. It's an organization providing banking services. They were in 2016 already. They were raising £1 million through crowdfunding, but also together at the same time did a 7 million venture capital round. Their Series B was 22 million euro in venture capital and 2.5 million in crowdfunding. And a year later, they even topped it up with a funding round of more than 100 million in total, with more than 20 million euro, or with 20 million euro through equity crowdfunding. And interesting for the equity crowdfunders is that this last funding round was already 40 times higher than the funding round 2 years ago. So the valuation also increased a lot for these funding rounds. So before I go to the tips, are there any additional questions I can answer?
I don't see in chat, there is no currently new questions.
And I just continue. So I've shown some examples, but of course these examples are the end result. So how do you get to that end result? What do you need to do if you structure your own crowdfunding campaign, and where do you start? Step one, and it's a very important one, I mentioned it also before, make sure you involve your community. So you can involve your community upfront, but also during your crowdfunding campaign. Because during your crowdfunding campaign, you're actively reaching out to potential investors. Ask your early stage investors in your crowdfunding campaign also to help share your story. Do it together. But you can also use crowdfunding. You can also use your community before you even start your crowdfunding campaign. So one of the models that you can use is building up your community base and building up this connection with your potential customers, and building up this whole community around your company is by crowdsourcing, involving them, bringing ideas outside in, give them possibilities for voting, for example, and think about, for example, the open source project. You always have a community of developers around it that are using your technology or are also programming and offering their ideas and concepts. This already is a great way of building your community. And based on the crowdsourcing activities, you can prototype, you can develop a new business model, for example, and then you can use crowdfunding to finance one or more of these additional activities. Because you don't have to crowdfund everything together. You can even finance very small parts of your projects. You can even finance, for example, specific features of your open source project, for example. And a company who was doing this and is experimenting with it is Sony. Sony has a platform called First Flight. It's an internal platform for the Sony employees. They are able to launch their ideas for specific products that are really in an R&D stage. And for example, this is a watch with a payment module. It's, by the way, quite an old project. So nowadays we all have these payment modules in our watches. But they raised 20 million yen, around 150,000 euro, just to test and do a prototyping. So this way, also some corporates are trying to experiment with these concepts and trying to involve the early stage the early stage customers already in involving there in these projects. So a second tip, it sounds very simple, but it's one of the most common mistakes being made, is make sure that you have a clear goal. And why is this important? Is that if you are trying to sell your arguments why they need to invest in your project or your company, you only have a window of opportunity that's really short. It's not a professional investor who's going to take the time to go through all your investment materials and all your documentations. You need to have your pitch clear and ready. And it also means that the idea needs to be explained quite simple, and therefore also it needs to be focused as a very specific project. That's important to recognize, that you're not just financing or raising funds for your company and all your dream idea and all your ideas for the next 5 years. You're going to raise money for a very specific time and for a very specific project in your company. And for example, this is just giving an example of an energy park, a wind park, where a local community just wanted to put 4 new windmills to raise renewable energy. It was already a very strong campaign needed, but in the end, more than 1,000 people contributed to the investment. But it was, and of course, there were all kind of other ideas behind it, what we were able to raise. But we really focus on, okay, these 4 windmills we need to finance. We need to have 18.5 million euro. This is the financial structure. These are the rewards that we are giving, making it very easy to explain. So the third tip is focusing on urgency. Why do you need the money and why do you need it now? That's always important, especially because there is, as I mentioned, the investors have limited time to look into a potential way of supporting you. And also you as a founder, you don't have all the time of the world to start reaching out to everyone and use a full year of crowdfunding. So normally a campaign of 45 days, 30, 45 days, that's the ideal timing. Don't start a crowdfunding campaign that takes you 4, 5, 6 months, because you cannot keep up with it. You still have to do your own work next to it. And it's better to have a very focused campaign of 30 to 45 days than to spread it and use 5 to 6 months for your crowdfunding campaign. This was, for example, an example where there was a management buyout after a bankruptcy from a local bookshop in a very nice location in Maastricht area. And they only had 30 days to raise the money. Otherwise, it was sold to an external investor. So there was a very clear goal. It was a very short time frame, and that made it possible for them to raise the funding. I already mentioned the return on involvement. So what do the investors want in return? Make sure you understand what is important for them, and you can ask them. It's not something that you have to invent yourself from your desk. Go and talk with them. Try to find out what is interesting for them. Why do they want to participate in your crowdfunding campaign? What do they want in return for it? And sometimes it's really only a thank you, recognition that they are part of this whole concept. But sometimes they also want to have a very clear reward in return. And either these can be social, these material, or the financial rewards. So think about these different types of rewards. Some examples again. This is Waka Waka. It's a solar light being charged. You're able to charge this by solar energy. The idea was that every donation you made, you received one of these electric lights, and one of them was given to developing countries. So it was a buy one, give one for free action. Another interesting example was the launch of a new online newspaper. Some of the leading journalists were coming together, developing a new type of online platform for news. And instead of raising equity funding, they were just finding new readers. So they were trying to get people to subscribe. For 60 euros, you would get access to the platform for a year. There were more than 80,000 people who were interested in becoming a subscriber. So they raised €1 million, and that was a seed funding. So that was already enough for them to start building their online platform for reporting. And most of these people also stayed after a year. So they bought their subscription for a year, and after a year they were still interested in continuing their services. But of course, it's also possible that people want a financial reward. So this is a company developing a platform for the sharing economy. It's possible for you to share your product that you're not using at home that often with your neighbors, but through an online platform. And this is just a business, social business, but it is a business. So they were just selling equity in the company. And also for them, they raised more than €2 million in equity. So it's also possible to use equity crowdfunding for this. So last but not least, communication plan. I think I mentioned it before. If you think about crowdfunding, a crowdfunding campaign is also a marketing campaign. And this way, you also know that if you structure your crowdfunding campaign wisely, it's a great way of promoting your product, your company, your services also in the network that is interesting for you. But you have to create a compelling story. So not just, you have to know what is the personal story. How do you make sure that it is that people understand what you're doing, why you are doing it as a founder. So the best crowdfunding stories are told by the founders themselves, what their motivation was, what kind of problems they see, and how they're going to fix it. This is, of course, one of the most difficult parts to implement rightly, but it is very important and very successful if you do it right. So spend enough time on developing your story, developing your communication plan, and also if you think about a communication plan, it's important to think from the inside out. And that means that if you are communicating in the beginning of your campaign, keep it small. Focus on your community of investors. Perhaps these are your current customers already, so people that already know you. After your first activities and your first raisings, then reach out to friends of friends. So that can be people in your mailing list, in your LinkedIn network, for example. And only in the last phase of your communication plan, reach out to the general media. The reason is that if you are, because the biggest mistake is reaching out to the mass media from the beginning. And what happens then is that you have this great story and you want to reach out, and perhaps you are lucky and one of the national newspapers is publishing your story, and then people are clicking on the website and they clicking to a crowdfunding campaign, and then they see that only 2% of the funding is raised yet. Then people back off. They don't contribute to it because people want to contribute to success. They want to join a successful campaign. So it's better first to raise the money from your in-crowd, to see the people that are really supporting you, people that you can call, that you can speak to directly, and try to convince them to invest in a very early stage. And then after 1 or 2 weeks, when you have 45 to 50%, for example, raised already, then reach out to mass media, because if people then see your campaign, then it's already a success, and then you see you can convince them, and then they contribute. So that's an important way how you structure your communication plan, and the timings, of course, they're very important. So some key takeaways. I hope I pointed out in the last 60 minutes. Crowdfunding, think about it, it's community funding. So it's an involved community. So try to involve them as early as possible. And you can, even if you don't start your crowdfunding campaign now, you can already build your community, try to involve them in your production now, give them feedback, start a newsletter, share your story already. And when you've built this momentum, makes it easier to start your crowdfunding campaign a bit later. Crowdfunding is more than money. You can use it for marketing purposes. It helps build your storyline, but you can also use it for market research. So you can launch these crowdfunding campaigns for different products, and you can see which kind of products are people interested in really buying. Because if they're really, with reward-based crowdfunding, for example, if they are really buying these products, then they are really interested in it. Make sure that these goals are specific enough. So you have to, especially if the companies are growing a bit bigger, then people tend to raise crowdfunding only for the company. But you have to still have to focus on what is the specific goal and try to explain it in as simple words as possible. Why are you using this crowdfunding campaign at this moment? And again, this is a marketing campaign, so ensure that your story is right, that you have a structured way of reaching out to the different types of potential investors. So know what they are interested in, know what they want to get back as a reward. So what different types of investors do you have? And also, how do you use these different levels of communication? So in a crowd and later on to the mass media. To conclude, I want to give a short look forward what will happen with crowdfunding in the next couple of years, in the next 10 years. 10 years is a bit far away. but very important is that ECSP, what's written here, is the new European crowdfunding regulation. This is very important because what happens now, for the first time, there is crowdfunding regulation being adopted on a European level, and that means that from November of this year, all crowdfunding platforms in Europe that are offering investment opportunities, so that is lending and that's equity crowdfunding, they need to have a European license. It also gives the possibility for crowdfunding platforms to operate in all European countries. So what we see now is that there are big differences in Europe with crowdfunding. Some countries have very specific regulations, like the UK, Germany, France. There are countries where there are some exceptions on existing regulations where making it possible to use crowdfunding, such as the Netherlands, very temporary solution. But there are also a couple of countries, or a lot of countries in Europe, where investment crowdfunding is still not allowed. So with this new regulation, crowdfunding will be legal in all European countries. It will be working exactly following the same rules, and it gives also the possibility for crowdfunding platforms to operate cross-border. So it makes it easier for UK platforms to offer their services to all European startups, for example. So what we've seen now already is that the large equity crowdfunding platforms, for example, from the UK, are opening up offices now everywhere in Europe already to start build a pan-European equity crowdfunding ecosystem. And the same will happen also with lending platforms. So that gives a lot of opportunities for startups, especially in countries where crowdfunding isn't developed that much yet, to also start using crowdfunding. And the current status is that it is now, the regulation is now adopted, but by November of this year, everybody needs to, all the platforms need to have this new license. Otherwise, they're not allowed to operate anymore. The good thing with this is that, or the added value from this is that we've seen now that because this is part of a European, the European Capital Market Union, it also makes it much easier for large institutional investors, venture capital funds, but also for banks to co-invest next to crowdfunding rounds. So the examples that I showed were combining equity crowdfunding with venture capital, for example, or bank loans with crowdfunding. These are examples that are working, that are very successful already, but still in a lot of countries, you see that the traditional finance industry find it a bit risky to co-invest together. With this new regulation in place, it makes it also for them much more easier to invest. So that's something that we will also see in the coming years, that it will be, banks will much easier forward applications to crowdfunding platforms, start financing projects together. We've seen venture capital firms starting their own equity crowdfunding platforms or participating in the investment in equity crowdfunding platforms. So there is a big potential. Crowdfunding has been growing very fast in the last 10 years, but I think also for the next 10 years, it will continue to grow. Thank you for your attention. Let's see if there are some questions I can still answer. If you have any additional questions afterwards, you can also always reach me. These are my contact details. Thank you.
Okay, thank you very much. There is one more question in the chat. The question is, can you recommend any partners that can help with a slick presentation for crowdfunding? Or would you actually recommend against it? Like, would you do a campaign yourself or with someone? I guess that.
Okay, that's a very good question. So I would definitely advise you to get support with the design of the campaigns, but I'm against outsourcing your crowdfunding campaign to a crowdfunding campaigner. The reason is that you will miss your connection with your potential investors and also with your potential clients, customers. So you don't get the added value from a crowdfunding campaign. But also, it doesn't really work, because what I was telling about being authentic, your authentic story needs to be authentic. Cannot be an authentic story that some marketing professional just invented for you. So you need to show as your as campaigner, and that can be the founder if you are a small company, or that can be the product manager, for example, for a specific product if you are raising funding for it. That needs to be that person, because that's the only person that is able to convince these people and also to explain the story why it's so important to use crowdfunding.
Yeah, and I had a question from my side as well. Like, how much would you say? Like, what does it cost if I'm thinking about starting my campaign? What should I take into considerations from my part?
It doesn't have to cost a lot of money. It only has to cost your time. So what I normally, because most of the crowdfunding platforms, they are operating with a success fee. So they only charge perhaps a very short small upfront fee from a few hundred euros, just to place your campaign on the platform, and they just charge a success fee of a few percent if you are successful. But you have to prepare the application well, and that means that most of the time you need 2 to 3 months before you start your campaign for preparation. And like I mentioned, you don't want to have the campaign take too much time, so perhaps 4 to 6 weeks. But after the campaign ends, you still want to follow up with your investors, and that can also take you a couple of weeks or a couple of months, depending on the size of your campaign. And if you're doing that for a very small campaign and trying to raise 10 to 50,000 euro, for example, that's something that you can do on your own or with a small team in your organization. If you want to do a larger campaign and you need to raise more than €1 million, for example, it helps to attract a crowdfunding advisor or a legal advisor or a marketing advisor to support you. But as I mentioned, not to run the campaign. So it needs to be supportive. It needs to be more helping you with your strategy, helping you with your planning. But in the end, you as a founder will always be the face of the campaign.
Okay, thank you. One more question from my side. Is there some kind of overview of all the options of crowdfunding in Europe, or like, if I don't know the options, let's say that I have just heard about my local ones or Kickstarter, like, should I just Google, or is there some kind of overview?
Now, there is one example. So there is not a good complete overview yet. That's the reason is that there are so many different crowdfunding platforms, and they change very often. So one of the projects we've been involved with, and by the way, Savita also, is Altvinator. So altvinator.eu, there is an overview of alternative finance platforms, including crowdfunding platforms, but also other types of platforms. But it's far from complete yet. So what will happen, but that's not something you can use now, is that with the new European crowdfunding regulation, that all the investment crowdfunding platforms, they need to register with their national authority, but also with the European authority. So there will be one database of all European crowdfunding platforms that have this European license, but that will still take 1 or 2 years before that is completed. So at this time, the best way to do it is to find the national association. So in a lot of countries, there is a national association for the crowdfunding industry. Or indeed try to find out what is the national crowdfunding platform that is that is operating now. But most of the time, most of the countries have a crowdfunding association already, even if they have only 1 or 2 members.
Okay, great. Thanks. I put the chat. I put the link also in the chat for the Elfinator. So it seems that there is no more questions right now. So then, thank you so much for sharing your wisdom today. I for sure got a lot smarter. And that's it from our side. You can keep an eye on our webpage as well to see the upcoming webinars. And I wish everyone a good evening.
Evening. Bye.
Thank you. Bye.